Market analyst this week is Roy Smith. We talked with Roy on Wednesday afternoon and covered basis price, strategies for this year's crop, and the potential for a large soybean output in South America. We began by looking at the crop conditions around the Plattsmouth area.
Well, we started on Monday harvesting some corn, and was a little bit surprised. It's pretty dry for being in August. We got a little rain the last weekend, and so that's kind of kept the soybeans green, and hopefully, put some weight in those pods. There are not a lot of pods out there, but there are some, and it's not going to be a total wipeout, but it's better than we thought maybe that would be a month ago.
As we shift into the markets, this year is absolutely unique. I know you do a lot of historical work, so historically, are the trends following what you thought they might?
Well, anytime we get what I call a worldwide cataclysmic event, like a major drought, or in this case right now a hurricane, although that's not major worldwide, you expect the prices to trend up through the summer, and they have. Now, one of the things that I watch is what I call the August low, and the August low this year was scheduled to be on August 20th, and in fact, right after the 20th, on the 21st, we had a big jump in soybean prices, and right now the close on Wednesday of this week was 69 cents over what the price was on the 20th of August. So that feature of the historical charts is holding true, and something for people to watch.
I know one thing you look at is the September crop report, which comes out September 12th, and selling maybe before it. Are you still looking at that this year?
Historically, year in and year out, the day before or 2 days before the September crop report has been a good time to make sales. Now, you have to temper that this year with the question mark about what kind of yields you're going to have, because obviously you're not going to want a forward contract if you're not sure you've got the grain to sell. So, but yes, especially irrigated farmers, but also those who have some crop, as I do, you need to look at that September crop report and maybe make a sale a day or two before that.
The last time we had talked, you mentioned you didn't have any corn contracted out for this growing season, but you had a little beans. What's your strategy here as you start to take it out of the field?
Well, I'm putting the corn in the bin right now because we need to get it dried and kind of get the condition normalized. And but I'm going to be looking at maybe making some sales of corn here before too long. Beans, I've got about 25% of my crop forward price from a much lower price back last spring, and I won't do anything on beans till I see how many more I'm going to have than what I've sold. Right now, I'd say it's kind of questionable.
What are you seeing in basis numbers here?
The basis has been real good up until about a week ago, and then coinciding with the beginning of getting some new crop corn in the elevators, we saw the basis slide off pretty bad, and you normally expect that. You don't like to see it, but it happens pretty often, and so I'd say my strategy going into this thing is to go ahead and put the grain in the bin, and I'm thinking the basis is probably going to narrow up pretty drastically when you've got to realize we're almost 2 months ahead of time on harvest. Once or twice in my career, I combined corn in August, and it really didn't go very well. But this year, we're combining corn in August, and I'm going to be almost done with mine, and it's worked very well. So
I know you're talking about some of the grain already. I should have mentioned this. You're also looking at the crop insurance and maybe trying to protect yourself a little bit there.
Well, we have to consider that the price is set for crop insurance in October, basically the average for the month of October. And that's at risk right now, because if it stays where it is, we're going to see potential for a big payoff in the crop insurance. So you want to look at that differential between fall and spring in both corn and beans, and the differential is something over $4 in beans and over $2 in corn. And if that looks good to you, you may want to lock some of that in, either using the futures or options or some kind of a cash strategy.
I want to quickly ask you about South America. What do you expect to see as we get into 2013 and they start to pull a crop, specifically soybeans, out down there. What do you expect to see that do to this market here?
I think that they're going to plant a huge crop of soybeans. There isn't any question about it. I mean, $19 or $17 beans looks attractive to everybody, except people that are buying it. So we need to be wary of that crop comes in the spring of 2013, and so we could see the highest price of the year here come in the dead cat bounce shortly after harvest in the United States, and then trend down going into the spring. No guarantees, but that looks like a high probability.